Hey everybody, welcome into the Thinking Crypto podcast, your home for cryptocurrency news and interviews. I'm your host, Tony Edward. On your way in, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Spotify or Apple Podcasts, please leave a 5-star rating and review. Folks, we have a very interesting report coming in from Bernstein. Their analysts are predicting that Bitcoin spot ETFs are going to get major approvals at wirehouses, and they're maintaining their $200,000 target by the end of 2025. Now, the price prediction aside, I want to talk about the approval at the major wirehouses because this is going to be the next wave of capital that's going to come into the Bitcoin ETFs and the soon to be approved Ethereum spot ETFs. So we've been seeing waves of capital coming into the ETFs, and then there's a cool down, right? And I've spoken to different ETF analysts such as James Seyfert, Eric Balchunas at Bloomberg, as well as Nate Geraci at the ETF store, and they are all saying the same thing. It's going to come in waves, and what the ETF issuers like BlackRock, Fidelity, and others are doing right now is going out and meeting with the RIAs and wealth managers and educating them about these Bitcoin ETFs and how they work and all that. So that educational brand awareness campaign is still in progress. So it's crawl, walk, run, right? And we are still just literally months away from the launch of those ETFs. It hasn't been like a full year yet. I think after a year, then you can step back and say, okay, let's see the overall performance. Now, so far, the performance has blown every prediction out the water. It's been incredible. So the wirehouses would include folks like Morgan Stanley and many of the big firms who are going to be able to trade these ETFs and put more capital in. So I'm very bullish on this. I believe we got much more excitement and fireworks to see here. So the analyst said the Bitcoin spot ETFs are on the cusp of approval at major wirehouses and large private bank platforms in Q3 or Q4 of this year, echoing recent interviews from Bloomberg ETF analyst Eric Balchunas and Bitwise CIO Matt Hogan. The Bernstein analysts claim the institutional basis trade is a Trojan horse for adoption, and these investors are now evaluating net long positions as they get comfortable with improving ETF liquidity. The basis trade here refers to a strategy where institutional investors arbitrage the difference between the spot and futures prices, buying the spot Bitcoin ETFs and selling the CME Bitcoin futures contracts, aiming to capture a profit from the price spread when the futures contracts matures. Here's a quote. We believe the basis trade is mostly driven by hedge funds, approximately 36% of institutional allocation. However, based on our conversations with investors dabbling in Bitcoin ETFs, the next step after the basis trade is evaluating long positions, the analyst said. So this makes sense. They're trying to do this arbitrage and make the money that way. And of course, it makes sense because we are in a bull market, an uptrend that hasn't been invalidated despite Bitcoin's pullback. So they're looking to ride the bull market wave here, and so am I, and so are you, right? We're looking to make a significant return, and obviously there will be an eventual blow off top, but we're not close to it yet. And in fact, I want to share the following chart here from Rect Capital, who does great chart analysis showing the comparison of where we're at in our timeline in this cycle versus previous cycles. And you can see that what some may call the fifth wave up, if you use Elliott wave theory, is not here yet. That massive euphoric run up where the Uber drivers and the grandmas and everybody's talking about it, right? And capital is coming in and everybody's super euphoric, and we know that's the time to be selling. So we're not there yet. And I think the next wave of capital that's going to come into these Bitcoin ETFs and the eventual Ethereum spot ETFs will be significant. And we saw the preview of this, right? Just earlier this year with look at the record-breaking inflows into Bitcoin. Look at what happened with meme coins and certain altcoins like Solana. Incredible amounts of capital and liquidity entered the market. Well, it's not over yet. And if you look at the charts here, I know right now it's like, oh my God, what's happening? People are getting fearful. And as I've been saying, that's very bullish, right? Because when the herd starts to get fearful in a bull market, a massive run up in the opposite direction is coming. So I'm very bullish on this news because we were overextended, right? The run up for Bitcoin in early March, with that ETF approval, took Bitcoin to new all-time highs of around near 74,000 and never did that in its history before the halving. and there needed to be a cool down. So we're seeing that cool down. We're seeing a lot of bleeding on altcoins. And what's going to happen to that liquidity that's leaving the altcoins? It will go to Bitcoin. Bitcoin will pump for the next leg up. Then Bitcoin will hit its overbought status, and then the liquidity will flow back down to the alts. If you've been here for multiple bull market cycles, you know what I'm talking about. And these are things you want to pay attention to. So be patient, buy the dip if you can. I've been buying the dip on altcoins, not so much Bitcoin. I bought more Fetch, Render, which we'll talk about today. I bought some Solana as well because I'm seeing the liquidity going there. Some may ask, hey, are you buying meme coins? I'm not. Meme coins are not for me. I don't hate though. If you're buying some meme coins and you do well, you make money, then God bless. You know, I'm happy for you because I'm here to make money. And if you are making money, I'm happy. So guys, let's be patient. The DXY also is looking. It's looking, I'm not saying it's guaranteed or it's going to go this direction, but it's looking like it's breaking downwards. But you never know. It could be a fake out. It could reverse by tomorrow. But fingers crossed that this is the breakdown we've been waiting for. And it will collapse, guys. There's a lot of analysts who are looking at the charts for the DXY showing that it's going to hit its top pretty soon. And we could see by the end of June into early July, that's when Bitcoin and the crypto markets start rallying very hard off the DXY because it's inversely correlated. So be patient, my friends. Now, let's talk about Fetch, Render, and AI tokens. We've seen the AI narrative has been super strong, not only in the crypto market, but in the stock market with Nvidia, right? I mean, it's been incredible. If you haven't been following what's happening there, I highly recommend you do. This is why I look at the macro. I look at the stock market, the Fed, what's happening overall, because some of these things can trickle into crypto. And I think the AI narrative has been very strong in crypto as well. I told you guys in December 2022, my prediction that AI was going to be a strong narrative, and I took a position on Fetch. I told you guys that in a video. And if you took a bet on Fetch, you made a lot of money. I made some nice money on this. I also bought Render, and I continue to buy the dips for these AI tokens because the narrative is there and there's a lot of liquidity behind them. So here's an article that talks a bit about this and the upcoming merge around Fetch and other AI tokens. So Fetch.ai leads rally of major AI related tokens as Nvidia becomes the world's most valuable company. Fetch.ai, which its native token ticker symbol is FET, has spearheaded significant gains made by major AI-related cryptocurrency tokens in the past 24 hours, with the rally coming in the wake of Nvidia becoming the world's largest or most valuable company. Fetch.ai saw the largest rise of over 25%. BitSensor, which is the TAO or TAO token, climbed by over 19%. Render jumped by over 13%, while Near Protocol and Internet Computers saw gains under 10% each. Now, the big thing that's coming around for Fetch, guys, it is merging with Ocean and Singularity. So they're pooling these three blockchains together. I had actually interviewed, I believe it was the CEO of Fetch.ai, and we talked about this, and this is going to be a big merger. So the narrative is there, and there's going to be a lot of liquidity pooling together here, three blockchains pooling together to form a new token, the ASI token. So I think that's going to be big. And once again, this is not financial advice. Please do your own research, but this is what I'm doing. I'm just sharing my perspective. And I think FET under the new token symbol of ASI is going to rally like crazy, given we got this macro narrative around AI. Here's a comment from one of the writers here at the block saying, it should come as no surprise that on the back of Nvidia becoming the world's most valuable company, that AI tokens like Near, Render, and others are rallying. Both of these tokens are up around 300% in the past year compared to Ether at just over 100% during the same time period, showing high market interest in this sector. Now, folks, not to brag or anything, but I'm just giving you an idea of when you're early to some of these tokens, you can make significant returns. So like I was early to Fetch and buying at the bear market bottom, I was up about 560%. I started taking some profits off the table, and then I've been buying the dips, buying both specifically Fetch and Render. Now, some of you may hold Near, some of you may hold other tokens. That's fine. I'm personally betting on Fetch and Render. So this is something to watch out for as the bull market continues. I think every bull market has narratives. You had DeFi summer in the last bull market. You had NFTs. This time around, seems like a lot of meme coins, AI tokens, the ETFs, of course, around Bitcoin and Ether. And we'll see if GameFi, really shows its face in this bull market. I'm not entirely sure, but I am pretty much sure about AI based on what we've seen so far. Now, a great place where you can buy a lot of AI tokens and Bitcoin and altcoins is Uphold. It's a platform I've been using since 2018-ish. Around that time, I remember interviewing the CEO, the CFO, and many representatives. And I trust this platform because I've been using it for years. They have 260 plus cryptocurrencies. They're available in over 150 countries. They have top of the level security. They don't commingle or lend out your funds. They have proof of reserves. You can go reviews their transparency reports. You can also trade precious metals on this platform, such as gold, silver, palladium, and platinum. So if you'd like to learn more about Uphold, check out the link in the description. Now, folks, yesterday, of course, we heard about Consensus reporting that the SEC dropped their investigation into Ethereum. However, some folks are saying, look, yes, they have dropped it against Ethereum, but we're not fully out of the woods yet because the SEC could still do some things here. Joe Lubin, the co-founder of Ethereum and head of Consensus, he weighed in on the news and said, while we welcome this development, it's not enough. We must remain vigilant and continue advocating for clear and fair regulations that enable innovation to flourish. The fight for a transparent and supportive regulatory environment is far from over, but I have complete faith that our community can ensure and cement the bright future for Web3 technologies. Hashtag ETH for all. Stuart Alderati of Ripple kind of weighed in and said the same thing, saying a big win for Consensus, though questions remain. Does this mean the SEC thinks Consensus's offers and sales of ETH are not securities transactions or that ETH itself is not a security? What will Gensler say if now asked? What is the status of MetaMask and staking? This is no way for a government to regulate. Absolutely right. So there's a lot of unanswered questions here. Even Eleanor Terrett of Fox Business is reporting that we could see that the SEC still go after MetaMask. So we're not fully out of the woods yet, but it was a major victory that the protocol, the blockchain itself, and the token are not under investigation to be classified as a security. So that's in itself a big win. But there's still a lot of things that are up in the air, like staking and MetaMask and all these things. So we'll have to wait and see. But Gary Gensler is on the losing side of history. He is losing in the courts and in the public opinion. He and Elizabeth Warren are losing the support from Democrats, the people in their own party. And we see crypto regulations are making their way through the House, and we have to wait for the Senate, of course. And the political pressure is mounting. Donald Trump has been coming out and putting a lot of that pressure on Biden and Elizabeth Warren and Gary Gensler. This is forcing a lot of Democrats to do a 180 on their stance on crypto. So we've got a lot of positives here, but we got to keep fighting, I think is the takeaway, right? Because Gensler and Elizabeth Warren are not going to give up. All right, let's move ahead. We got news here around Helium. So Helium Mobile's developer is now licensing its tech stack. I don't know how many of you know about this project, but it is a blockchain project. I don't own the token, but I think it's fascinating and it has potential. I still need to do more research, but this is interesting news. So Helium Mobile is starting a licensing program for its hotspot devices, the cell plan provider announced Tuesday. Helium Mobile's hotspots let individuals or businesses set up mini cell towers that emit cell coverage and pay out tokens in exchange. There are already several third-party manufacturers and vendors for the Helium Internet of Things network, according to Helium's website, but Helium Mobile is currently the only provider for cell phone coverage devices. With the licensing program, Helium Mobile hopes to earn licensing fees from hotspots being manufactured elsewhere while simultaneously growing its burgeoning cellular network. Helium Mobile is being developed by Nova Labs. This cell plan runs on a hybrid of its own distributed network coverage and service Helium Mobile buys from T-Mobile. The plan piloted in Miami before going live nationwide in the US at a monthly price point of $20 last December. Helium Mobile has accrued 93,898 signups in total, according to a Dune dashboard. The dashboard does not track potential subscription cancellation, so the number of active subscribers may be fewer. So This is a very fascinating project, guys, and it has real world application clearly, right? And if they're able to do this right, it could be really big. Like I said, I don't hold a token and I'm not participating, but I have it on my to-do list. I don't know if any of you are participating or you hold a token. I would love to hear what you guys have to say and how you think this is going. So drop some comments in the comment section, guys. I would love to hear from you on this. All right, that's the news. Don't forget to grab a copy of my book, guys, Rethinking Crypto, The Crash of FTX and the Rise of Safer, Stronger Digital Assets. If you bought a copy already, please leave a rating and review on Amazon. And for those of you who haven't grabbed a copy, please grab a copy to support the podcast. Grab a couple copies for your friends and family who want to learn about crypto. It covers crypto's past, present, and future, provides tips for investing in crypto, and covers everything pretty much. The regulatory battles, why is Wall Street here with the ETFs and tokenization? What does the future look like? Why the regulatory battles with the SEC and much more. All right, folks, thank you for watching and listening. I appreciate you all, and I'll talk to you all later.